Can you talk about some of the negative consequences that could happen if we take a heavy-handed approach to regulating this developing technology?
Well, Mr. Williams, as a long-suffering Dodgers fan, I share a lot of the things you're talking about, and I think the era you're talking about was an era when baseball went from focusing on not losing to an era where it focused on winning. And winning and not losing are not the same thing. So I come back to Mr. Vargas's question a second ago, which I think is the right way to answer your question. Mr. Vargas asked the question of people have the potential to lose a lot of money. These things are volatile, they're risky. How do we protect them from those kinds of issues? There are two ways of answering that. One is to prevent as many people as possible from accessing this amazing technology. For example, the way the current legal regime works is certain kinds of assets can only be purchased by accredited investors, meaning rich people. So the only people who can get rich on this are people who are already rich. That'd be one way of protecting people from losing money, is to make sure that only the richest can access it. Another way of addressing it would be to make it safer the way that we made equities safer 40 years ago, right? We created mutual funds, diversification, sector funds, and other things that make it easier for regular Americans from places like my hometown in Colorado to buy equities without having to be stock experts. Strangely, in the US, we've refused to do that so far. So we don't allow crypto mutual funds. We don't allow people to diversify the way that they do in Canada, Germany, Singapore, the United Arab Emirates, and a series of other regulated economies around the world. So I would argue the way to win is to bring more people into the system more safely, not to keep them out at their own peril.
Great. Second question, we often hear that crypto industry is the wild, wild west, where there is no regulation guiding the industry. But as all of you are aware, that simply is not true. The SEC and the CFTC are the primary federal regulators, and our states also have strict regulations that all of you must be abiding by. So, Mr. Bankman-Fried, can you discuss the different layers of regulation that FTX must abide by as an exchange, and also in order to uphold customers' deposits in your digital wallets?
Yeah, thank you for the question, Congressman. And, putting aside the 190 other regulatory jurisdictions that we take part in and the dozens of licenses that we are acquiring each month in all of those, in the United States, there is the sort of state-level money transmitting license regime with, money service business and MTLs, which, we and many others are part of for any margined or financed or derivatives transactions in the United States. There is a CFTC regime where, there's licensure required to offer those products. For any products that might be a security as a digital asset, there doesn't exist a current very clear pathway for it, but that would be an SEC registered regime for it. Obviously, there's been lots of discussions about additional registered regimes for stablecoins and other assets as well.
How many various levels and types of regulators do you currently engage with? Because I know you are worldwide. You've indicated that you have multiple regulators that you currently work with. I'm curious if you can even peg that number.
Yeah, so there are dozens, probably soon hundreds worldwide that we're engaging with. And that includes all across Europe, all across Asia. And then, within the United States, we're engaging with state money transmitter, money service business licensure. We have a CFTC license for derivatives. We're engaging with the SEC. And, I anticipate more agencies getting involved soon as well.
Well, yes, and I want to make sure that we are not over-regulating that. One, I'm sure it has cost you an untold amount of money so far, and I'm sure everyone that has been dealing with that. But I also want to make sure, and no offense to any of you, I want to make sure that there are others who are going to be able to enter that space, and that they are not being blocked out, and that there is an artificial barrier to entry that is going to allow others to do, frankly, what you all did, which was be innovative and supply a product to people who are looking for that product. I'm going to have to move really quickly. I'm going to go to Mr. Brooks on a couple of things. Would you describe why establishing these clear rules of the road is important an important step before we add additional regulation and consider that regulation?
Well, Mr. Huizenga, it's good to see you again. I think the most important reason of many is international competitiveness. So other countries make this easier Okay, let me just make clear, other companies make this easier, other countries. I just came yesterday from the Middle East, where in Dubai and Abu Dhabi, they have super clear derivatives regulations, super clear ETF regulation. They're trying to lure Americans over there to build these products, and they're moving there.
So how are they viewing these crypto assets differently than traditional assets? I mean, what Rubicon have they crossed that we haven't? And why is it important to think about digital assets differently?
Well, I think one of the things that they've figured out is that crypto actually is less fundamentally different than equities and debt than you think it is. It's a risk-on asset that people want to invest in. They want to invest in it in Canada, so Canada builds a regime for it. They want to do it in Germany. We're the last country standing that hasn't figured that out. It's a risk-on asset that people want exposure to as part of asset diversification.
As opposed to traditional assets.
Correct. Well, Mr. Budd, it's good to see you, and thank you for that question. What I would say is, in some aspects of the industry, the line is super clear. There are some products that are legal in other countries and are just not legal here. So I take some of the investment products we've talked about earlier today, for example, exchange-traded funds. One of the things that makes crypto risky is that consumers may not understand the difference between one token and another token, and so they may want to diversify, much as I own an S&P 500 mutual fund. We don't allow that in the United States. We do allow it in Canada. We allow it in Germany, Singapore, Portugal, and a number of other places. So if you're a developer of those products, there's no fuzzy line. It's super clear. You can't do that here, so you have to go abroad. Okay? There are some other places.
Could you say why we can't do that here?
Sure. It's because the Securities and Exchange Commission has consistently refused to approve products that other G20 nations have approved.
So we're behind the curve?
Unquestionably. Well, maybe I can jump in there, Congressman. It's Brian Brooks speaking here just for a moment. I've said many times that language would be sort of like requiring YouTube to get an FCC broadcast license because they're a person engaged in distributing television content. I think what we need to recognize is there's a difference between centralized exchanges. You have two of the biggest ones represented here who all agree that they should be engaged in tax reporting, and they do that, versus decentralized algorithms where there is no company involved in the transactions at all, and there's no one well situated to provide that kind of tax reporting. So that distinction is, I think, super clear. The technology has enabled people to transact peer-to-peer with no intermediary. So who is it that we're asking to do the tax reporting in that context?
Mr. Brooks, can you discuss how blockchain and distributed ledger technology can enhance our cybersecurity posture?
Well, Mr. Loudermilk, it's good to see you, and I appreciate the question. The simplest answer, as I said earlier today, is that blockchains are as much about transparency as they are about security. So one of the biggest problems when you think about the biggest cyber hacks we've ever had in the United States is how long it took for us to figure out that they occurred. The case of Target, the case of Equifax, some of these things. We found out days and weeks later by accident that they occurred. And if you think about the Equifax hack in particular, initially we thought it was a small problem. Weeks later, we learned it was a medium-sized problem, and only months later did we learn it was a gigantic problem that involved all of our data because there was no transparency. The thing about blockchains is every single block as it is validated is publicly visible to the network. The other thing about blockchain is it's based on a consensus mechanism. So before you can have a change to the ledger, you have to have a significant majority of all of the validators agree that that's the correct change. And so unlike normal networks where one bad guy can defeat the entire system, here you have to have thousands of computers agreeing at the same time that the change can be made, and even then everyone sees it. That hiding in plain sight aspect is the safest thing about blockchain. It's why it's so critical to our security infrastructure. But in terms of the problems being solved, I think the first issue is the biggest critics of cryptocurrency have been the biggest banks. Those are the people who are the most concerned about the entry of stablecoins into the payment system, about the ability of crypto assets to build networks that are away from the clearinghouse. Those are the biggest critics, and so I think that tells you a lot of what you need to know. And the reason is because the way that Web3 solves a lot of problems, it's really twofold. First of all, it eliminates the toll collector role of traditional banks and traditional broker-dealers. The main thing that they do is they employ large numbers of human beings maintaining ledgers of account and allocating credit for a fee. Bitcoin and other cryptocurrencies do that without human beings and with no fee. And the elimination of minimum account balance fees, the $25 wire transfer fee that your bank charges to give you 3 days to send money abroad, those are gone. Okay?
Thank you.
That's what's so important. But the last part is it unlocks value that traditional economic structures don't unlock. The creator economy, play to earn in the gaming system, those don't exist.
To that notion, to the people who find all of this a bit mysterious, are we at risk? Do we see warning signs of a bubble in this marketplace, if I'm allowed to call it that? What do we do to make sure that the industry does not threaten the overall stability of our financial system? Maybe, Mr. Brooks, I'll start with you.
Thank you, Congresswoman. It's good to see you again. I'll just give you a very quick anecdote. When I was practicing law, I represented one of the largest mutual fund complexes in the United States, and in their market room, they had a chart, a physical chart showing the U.S. equity market from 1792 to the present. What I remember about this room is it was a full city block long, and if you stood at the end of the room and looked at that chart, it was a straight line up and to the right. But if you walked right up close to the chart, you could very clearly see the Civil War and the Panic of 1907 and the Great Depression and all kinds of other volatility along the way. What I would tell you is, in the beginning of a fundamental technological revolution like this, the early days are going to see turbulence, but the long chart of crypto in only its 11-year history is up and to the right, just like the U.S. equity market. So what I would say is, there are risks, there's disclosures that ought to be had, there's framework regulations should be adopted, but the fact that the price goes up and down doesn't make it any different from U.S. equity markets in the first 100 years of the country's existence.
Well, that's a great comparison and probably a metaphor for other things that we are struggling with in our democracy. Hopefully, the upward trend is the trend. Let's pray that that is so.